Welcome to another episode of Millennial Investing Explained. Here's today's question. Assuming someone has decided on the right type of account for them, which strategy should a new investor implement? Should they pick individual stocks or should they diversify through a low-cost ETF?
So my job obviously is very much focused around picking stocks. And so I'd love to just say, get in there and start picking stocks for everyone. But the thing is, it's just not that way. I mean, really, it depends on the individual and that individual's risk tolerance. I mean, we're talking mostly about millennials, obviously, here. So they're more in the grow your wealth phase of life as opposed to the protect your wealth phase of life. But it's always worth understanding how far you are down the line and what phase you really are in. But I think that you can invest in stocks without having to pick stocks. And a good way to get that started is by just investing in the S&P 500 index fund. To me, that's just the simplest, vanilla, easiest way to go ahead and get invested in the stock market without feeling like you're taking on too much risk because it's that index fund. It's based on 500 different holdings, different businesses, and it's a good first step, And then, like we say, you got to learn how to walk before you can run. Well, you're walking when you get that index fund, when you buy something like that. And then learning to run is maybe when you start bringing those individual stocks into your portfolio, if you feel like that's something you can tolerate from the risk perspective. A lot of people can. That's really understandable. It's our job to try to teach people why they can do it, but some people don't want to, and that's very understandable. So index funds are a great way to go.
One of the ways I explain it, and I like to recommend to people, is to start investing in your 401k. Learn the ropes that way, because a lot of times you can't pick individual stocks in a 401k. Now, of course, there are some plans where you're self-directed and you can do that. But in general, 401ks, you're not picking individual stocks. So I think that's a great place to start. You just pick your ETFs or mutual funds and you can start there. Now, in today's culture, though, people aren't staying at their jobs forever. So there's a good chance that you're going to leave your job, which means that you're able to roll over your 401k. And when you do that, rather than rolling over that 401k into your new company's 401k, what I recommend is taking that money from your 401k and rolling it into an IRA. And now you can use some or all of that money to pick individual stocks. You have some experience with investing through ETFs and mutual funds in your 401k. You have your feet wet and you kind of have an idea of what's going on. So now you can start picking individual stocks. And then if you want, you can use your new company's 401k to diversify again, or just invest in ETFs and mutual funds.
Yeah, I like that. I'm glad you said that because a lot of places don't give you that self-direct option. And when I got to the Fool, they actually do offer us that.
That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.